David Shapiro here. We have your market update for March. My colleague Lee Abraham here as well. And let's dive right in. So we've got about 1,650 listings on the market. This is single family homes in the city of Austin. And you see that is unchanged. And historically, that's really low for this time of year. And we'll show you that here in a little bit.
So David, here we're looking at the monthly housing inventory, and there's multiple numbers because there's multiple ways to calculate it. As you mentioned, there's 1,646 active listings. And if we take a look at the average number of sales over the past 12 months, we were selling 731 houses a month. That translates into a 2.25 month inventory. Then as we look at the chart there, the 3-month metric number of closed sales average for the past 3 months, quite a bit lower at 491 sales. You divide that into 1646, you've got 3.35 month inventory. If we take a look at the last month of closed sales, there were 455 closed sales. That gives us a monthly housing inventory of 3.62 months. However, and we talked about this last month, that going forward, we're now including the monthly housing inventory in this graphic based on pending sales. This is the most real-time indicator that we have available, which is how many pending sales have there been over the past 30 days. It's a very different number as compared to the closed sales over the past month, as well as the past 3 months, but more similar, David, to the average over the past 12 months. And of course, that past 12 months includes some very strong demand months in the first half of last year. So a 2.35 month inventory based on pending sales. To me, it's fascinating when you look at the difference between the lagging indicator of the 12, 3, 1 month closed sales and how much higher those monthly inventories look from that perspective. We'll be including the 30-day pending sales going forward in this particular view of the stats.
You can see the 30-day monthly housing inventory, how it's trended over time. And we've been hovering in this 3 to 5 range since August of last year. We anticipate, as Lee was showing, with pendings increasing so much, that this will continue to trend back down along with seasonality where things tend to pick up this time of year.
So here we're looking at the number of sales per month. And as anticipated year over year, big drop, 38.7%. Fewer sales in February of this year as compared to last year. A little bit of a bump compared to January, 420 closed sales in January, 455, David, in the month of February. So we're trending in the right direction, but still somewhat of an anemic number.
Yeah, so the trend of fewer sales continues, although it feels like it's picking up here as we go into the spring, which is good. Here we have the average sale price. So this is, I think, the indicator that the majority of people are curious to watch to know what's going on with the value of their home. And you can see the average sale price is down 9.5% year over year. We were up a little bit last month, down in December. So this is now a bigger drop than the 4% that we were seeing in December. And so this is where we have these bigger comps as we go into the spring, where the market was at its peak in the spring and early summer of last year. You can see it peaked in May at 912,000. So we might see some lower year over year declines or some bigger declines year over year because of that. But anticipating that, we're going to hold pretty steady with our pricing compared to the fall of last year.
My forecast at this point, we're revising it a bit based on some of these numbers and then taking a real careful look at, for example, the May average sales price of 912,000. For the next several months, we're going to see double-digit year-over-year declines. But then what really is necessary, David, is take a look at the 2021 numbers and then the 2020 numbers. And now you can start to see more realistic trend lines of what's happening. So, for example, in February of 2023, let's call it 720,000. Well, sure, that's a big drop from last year, 795,000. Let's look at 2021, 734,000. So the figures currently are a little bit less than it was in 2021. And then look at 2020 as we try to gain some context on the market over the past few years. And clearly, we're not going to see declines as compared to 2020. We're hovering right around 2021. My forecast at this point is that it's going to be a rough few months for year-over-year comparisons, but by the time we get into the fourth quarter, there's a fairly decent chance that if the cards fall correctly, we'll actually be up at the end of the year, year-over-year. So we'll see how that plays out.
That's a good analysis. I think what people need to understand, because it could get scary with headlines here coming up in the next couple of months as news outlets do their fear mongering and try to get clicks. So here we go. How long has it taken properties to sell? So up 170% year over year, up to 73 days on market, which is historically high now. Like we were seeing 60 back in January, and that actually was somewhat in line with what we had seen in previous years. But 73 days on market for the city of Austin for single family homes is higher than what we've seen historically. But we anticipate that, as the spring picks up here, that will not increase any further.
If it does, it'll be marginal. I think we are close to a peak. We'll see. It's all based on the number of new listings coming into the market as well. So a lot of moving pieces, but clearly a significant number and a red flag that we're monitoring closely. And David, this is really the other part of that matrix of variables, days on market, so on and so forth, the number of new listings. What we don't want to see is a huge spike. We don't want to see a huge spike in the number of new listings hitting the market. That affects the fundamental supply demand and a lot of other things such as the average pricing and related pricing impact up or down. Right now, the number of new listings coming to the market is a very steady trickle. It's down actually year over year. It's up a little bit month to month. This is a healthy fundamental for our market. Again, if this was 2,000 listings, 1,500, 1,200, those kind of numbers right now, be much more concerned. To me, this is fundamentally sound and in line with the forecast that we've been giving throughout this particular presentation.
Expired listings, I think the story here kind of stays the same as previous months. Nothing really of note.
Totally agree. This is a benign statistic for our market. And again, if these expired listings were way up, it would be a red flag. That's not the case. Similarly, the sale price list price ratio will clearly, compared to last year, it's going to be down. Last year at this point, it was 104.5%. That means that houses on average were selling for 4.5% more than the list price at the time of the sale. Here we're at just under 100%, 96.6. We'll call it 96.7. Hey, the good news is over the past several months, it's been trending upward. This is perhaps the most abstract of all our statistics, largely impacted by the list prices that listing agents are bringing properties to market. What we're seeing in the marketplace is a strengthening of the demand, more activity, and this movement closer to 100% supports that. And again, it's in alignment with all of the forecasts that we've been giving in this presentation.
All right. And the listing inventory barometer. So this is the most real-time metric we have to track this. And as you can see, we're at everything over 100%. So here's that line right there. It means that inventory is growing. And the trend was that up until, when was this? November. So up until the week of November 19th, inventory had been growing pretty consistently. And then we saw a reversal there where 8 out of 11 weeks, there was a decline in inventory. And now we started to see a little bit of an increase in inventory the last 3 weeks.
Yeah, and so if you look over to the left, you can just, do some calculations on how many more houses were there at the end of the week than the beginning of the week. And, you can do some quick math, anywhere from 30 to 50 more houses remaining on the market as a result of that increased supply outpacing demand. But again, these numbers are gentle, gradual inventory growth. This is not a crisis by any means. One thing, David, that I'll point out, just like we started adding the 30-day pending numbers earlier into our presentation, as well as here, We're putting out the barometer report, which we've mentioned a few times. Also going to be putting out for the first time a summary report of this presentation in PDF format that'll be combined with the barometer report. So anybody who is interested in really digging into the statistics and having an asset that you can review at your leisure, be sure to let us know, and we'll get you on our distribution list, because I think that by putting the monthly stats together with the weekly barometer really is creating a state-of-the-art report as people are wondering what the heck is going on with real estate in Austin.
All right, so that's within the city. So let's talk about outside the city limits. We like breaking it out because a lot of people just show the whole metro stats. And that's a little bit deceiving because now you're just blending the two. So by separating them, you get a better picture of what's going on in the city versus going on in the suburbs. All right, here we got the monthly housing inventory of going on what's outside the city. So just a quick recap. So the 12-month was at about 3 months of inventory, and it's grown as the number of sales have decreased each month. And the 30-day pending has picked up significantly, going from the last month of sales of just 1,300 to over 2,000. So the same trend that we're seeing in Austin, we're seeing in the suburbs, and we're down to just under 3 months of inventory there for the 30-day pending number.
Yeah, I think it's absolutely critical for anyone interested in the outlying area to take a good look at this statistic and what's happening here. That's a massive jump in the number of sales from the past month closed sales to the pending sales. That is a big time turnaround. And when you look at the 4.65 month inventory based on the closed sales versus just under 3 months with pending sales, that's a big difference. And so it's going to be very interesting to see what transpires over the next month outside the city and just how these trend lines project out. So very interesting stats, David.
Number of sales per month. So we see a 24% decline. So again, this is a little bit of a lagging indicator, whereas the pending is a little bit more real time. So this could change significantly going into March with the number of pendings that we have. But the same story where the number of transactions are just down in the marketplace, factor of, not as many buyers out there with interest rates as high. But that is definitely starting to pick up.
So, David, now as we look at the average sale price outside the city limits, wow, we've got our first double-digit year-over-year decrease in the average sale price. And again, the same conversation that we had in town applies here. Take a look at 2021 and look at that jump. 458,000 in 2023 is a big increase over the 2021 average, and you can see 2020 332,000. So it's very important when our audience, our clients, our friends, our family are being inundated with the mass media of what's going on, the meltdown of housing prices and all that. Our guidance is, yes, the facts are the facts. Year over year, there are declines, but have some context over the past couple of years and then take a look at what's going to happen by the end of the year. And my forecast at this point is the same. We're going to have some blood in the water over the next several months, at least on paper. But when we get into the fall and the winter, the fourth quarter, I believe that we're going to be relatively flat, maybe even up a little bit on these average sale prices year over year.
Days on market, so similar story to within the city, but here 70 days on market actually is not outside of the historical norm. So we're still within that if you look back several years.
And I think that's important. We talk about context, so maybe that's the buzzword of this presentation is context. It's different in town, outside of town, but they're related, they're connected, they impact each other. And the fact that has the high been 77 days as I look outside the city, February of 2019.
In January of 2019.
Okay, 81. There you go. So we're still within an established range for the Austin MSA, and I think that's one way of looking at this stat in particular as it relates to the in-town numbers that we looked at previously. It's still within a range that we've seen here in the Austin MSA, and I think that's important to note. Number of new listings, again, if we start seeing huge increases in the number of new listings, that's going to be a problem for sellers. It's good for buyers. And here we've got a little bit of a decrease month over month, just over 8%. Year over year, a little bit of an uptick, 7.8%. Nothing too dramatic, kind of a marginal increase in alignment with our forecasts.
Expired listings. So nothing to note here. Same as Lee mentioned within the city limits, it's benign.
Nothing to see here, folks.
Our sale price to list price ratio, again, nothing to see here as well. Same as it's been for the last couple months. The story of what's going on in the Austin market is things are picking up. So if you're a seller, we're starting to maybe get into a time where it could be a good time for you to list your property, as there's still limited inventory and buyer demand's picking up, as you saw with all the pending activity. Prices are, although they look like they're going down because of the year-over-year comps, they are still holding stable compared to previous months. So that's a good sign. It's just a little bit of a psychology if you're thinking about selling. They're like, okay, I'm not going to get the price I would have gotten if I had sold at this time last year, but it's still significantly more than I would have gotten 2 years ago. And you should have some really solid equity if you're a seller. So really just focusing on lifestyle. Is it the right time for me to sell based on everything else going on? And if you're not sure, reach out to us. We'd love to have a conversation. We can talk you through that and see if it's the right time for you to sell, because it's more than just like what's going on with prices and the market. It is a holistic approach to make that decision.
Anybody that's been in the market to purchase a home, we've been talking about not only the inventory that you're finding in the portals that you're searching with, but there still is a shadow inventory out there. We haven't seen a huge increase in the number of new listings. We have a variety of networks that we are in constant communication with, properties that are off market, still available for sale. Give us a call, drop us a line, let us know if you are looking, if you're wanting to get back into the market. There's some real opportunities there. Remember, you're not investing in a market per se like buying stock, where you're buying Apple stock in New York or Florida or anywhere, you're paying the same price. Here it's a unique transaction between a buyer and a seller, and we're here to strike the best bargain we can for our clients. That means negotiating from strength. As a buyer, this is a great time to be in the market. There's more of you out there, as we saw with the pending sales. So my recommendation is let's jump in, get in before your competition so that you can get the house that you want, unlike a year ago when you were in the market and couldn't get the house that you want because there were 10 or 15 other people bidding on that same property.
And sellers are eager. They're not sure what's going to happen with the market. So there's many sellers that are willing to take a little bit of a lower price or not as great terms, because they're just want to move the property before something changes substantially, because they don't know which way this is headed. Now, we could tell that it's headed in a positive direction for sellers, in our opinion, because things are improving, but not everybody else is seeing that in real time the way we are. So reach out to us, go ahead into the description, schedule a call directly with us, or shoot us a text or an email. We'd love to hop on the phone with you and talk about what your goals are and come up with a strategy for buying or selling here in Austin. Thanks for joining us. If you got a lot of this video, go ahead and like it so more people can find it. If you aren't subscribed, go ahead and do that so you get updated when our next videos come out. And we look forward to seeing you then.
Thanks, everybody.